what we were penciling in. Snehi had spoken to Swagata Gupta, the MD and CEO of Marico, to understand the company's roadmap ahead. Let's listen into what he had to say.
I think the combination of a pricing drop in the loyalty packs or the large packs which we took, the fact that obviously in tough times we have supply chain advantages, and also the distribution work which we have done in the last 2 years all helped. Having said that, I think Parachute should settle down to a kind of number which is a mid-single digit growth, volume growth in the balanced quarters. I would think that obviously, the last year where we had a very unprecedented inflation, we really tested the resilience and the brand equity, the strong brand equity. So that also augurs well for the brand.
Okay, while Parachute numbers were good on the volume front, on the flip side, Saffola has seen a volume decline due to portfolio rationalization. By when do you expect volumes to normalize, and can the brand return to healthy growth in the coming quarters?
It's a conscious call that below a threshold level of profitability, the volumes which we get or market share which we gain is not sustainable. And obviously this will anniversarize, but we'll be happy to have just a mid-single digit volume growth for Saffola as long as we do two things. One, convert a lot of our growth into the premium part of Saffola, which continues to grow, and especially we are doubling down on cold press oil, which is a very emerging trend, which will definitely grow in India. And the second thing is significantly growing the much more profitable foods portfolio. So another couple of years from now, the foods component of Saffola will perhaps be higher than edible oil.
Okay, sounds good. And also talk to us about the guidance that you've given. You've said that the company is on track to achieve this double-digit revenue growth to cross 15,000 crore revenue and deliver high-teen EBITDA growth in FY27. Which segments or brands do you think will lead to this growth?
As I said, we have multiple vectors of growth which are happening, whether it's the core, whether it's the diversified part of the business, the international business. I think all are firing. And when everything fires, obviously we take into account some things might not work every quarter. I think what is important is that we have now on a 2-year CAGR also, we are lapping a high growth. Last year we had a volume growth of 8%. And 2-year CAGR Q1 has been 10. So we are extremely confident of delivering the high single digit growth every quarter and maybe touching another double-digit effort in the next few quarters. As far as the revenue is concerned, I think given the fact that we started with the 23, delivering 15,000 crore will be, I think we are extremely confident of it, which will be one of the fastest in the industry, the 10,000 to 15,000 crore journey in 2 years. And as far as the operating margin is concerned, high teens is a base case, and we believe that we'll be able to deliver a 20%, at least touch 20% EBITDA growth this year.
Okay, and Mr. Gupta, you did talk about the foods business, and that continues to scale impressively. What are the key levers that can help the business become Marico's next major growth engine?
So foods, you're right, absolutely. I think if you look at foods, we are 9x, will be 9x of FY20 scale in FY27 and 15x in FY30. It's a combination of organic and inorganic initiatives, but the good thing is the organic part of the business has started growing again in double digits. We had one quarter last year where it was a single digit growth. And I think we have multiple vectors here also. The Saffola Foods True Elements is doing well. Cosmix is a very interesting brand. So is 4700BC. And I think and the nutraceuticals part of Plix. So we have multiple vectors of growth. All categories we are participating in are tailwind categories. And we are also now seeing a lot of synergies. You will see in the future a lot of synergies in GTM and other cost levers. So therefore, I think while we are mindful of top line, we are also ensuring that we do it profitably. And we are pretty confident about foods delivering 20-25% minimum growth every year.
Okay, understood. And let's also talk about the international business now, Mr. Gupta. Your international business continues to post strong double-digit growth. Which geographies are likely to drive the next phase of growth? I understand this time Vietnam and the MENA region have done well for you, but we've seen softness in Bangladesh. Any idea by when we can see recovery for the Bangladesh geography?
So I think you must realize that while in India, I think the government has done a fantastic job in insulating consumers from inflation, which happened post February and because of the situation in Middle East. A lot of the countries where we operate, there has been crude-led inflation in the form of energy, in the form of petroleum prices and other related products. So therefore, there would be some transient headwinds, and especially in countries where we are lapping a high growth. And also there's significant increase in logistics costs across the world because of the kind of thing which has happened in the Middle East in terms of disruptions. Having said that, we are extremely confident of continuing to deliver double-digit and mid-teens growth in the international business. There would be one quarter here or there, but I think Vietnam is a classic case where we actually did a significant, fantastic turnaround, including implementing the same Setu which we did in India. And Middle East, despite all it has remained resilient. And Bangladesh, I think, as we go into the second half of the year, we will see the recovery gradually.
Okay, understood. And also, let's talk about your premium and digital first brands. They are scaling rapidly. By when do you expect these newer businesses to become meaningful contributors to your overall earnings?
I think if you look at the digital first brands and premium personal care, clearly they are, I mean, if you look at the ARRs of between 450 and 1300, they're 1800 crores. So they are at least 10% plus, 12, 13% already. And they will continue to grow at maybe 20, 25%. What is also heartening is the fact that in the digital first brands, we are focusing significantly on profitability. Some of the new acquisitions we have done is actually recent times are profitable already, and they are accretive to the overall digital business. The most exciting part is our launch in shampoo, which we have done in the last quarter. It's a significant, big category, 10,000 crore plus. We have already, I think, exhibited our ability to succeed in this category in multiple international geographies. And therefore, we are extremely confident of hitting 100 crore number by the first year, and then take it 1 year at a time and grow rapidly in this segment.
Okay, understood. So that's your roadmap for your newer brands. Let's talk about market share. With over 96% of your portfolio gaining or maintaining market share, where are you seeing the biggest opportunity for incremental market share gains, let's say, over the next 12 to 18 months?
We are number one or number two in most of the categories we operate in. And in every category, we believe that if you have to have a meaningful long-term moat in any business, while you, of course, continue to innovate and grow the categories, you have to be number one and number two. I think the biggest opportunity is in value-added hair oils, for example, because we are still at 29% value share. We have exhibited in the past our ability to disrupt leadership. We have done it in some categories. We are betting big on almond as a category this year. And we believe over the next 2-3 years, we'll have meaningful growth. And there is also the other shift which we did is investing behind premium brands that helps us in mix and profitability. And therefore, ability to grow VAHO in double digits and teens continuously over the next 3 years is one of the important parts, while we will continue to gain market share in other categories. And I talked about shampoo. I think in food, there is enough opportunity. I think there's opportunity all around, I would say.
Okay, that sounds really good. Mr. Gupta, let's talk about your outlook on commodity inflation. While on one hand, you've seen copra prices that have softened, you've got vegetable oil and crude linked inputs that remain elevated. You've also spoken about a hike in logistics costs. How do you see the raw material environment evolving, and what does that imply for your margins going forward?
We have to, I think, be prepared for a crude in the range of, 85, 90. If it is 80, we'll be happy. But I think we have taken certain pricing calls. And at the same time, we have, if you notice, as an organization in the last 4-5 years, never in any quarter we have managed margins through A&P. So we'll continue to invest behind A&P. There's enough opportunity to continue to get synergies, cost synergies in the business. So it will remain a little elevated, but we are prepared for a crude price of 85 to 90 even in the balance year.
Okay, 85 to 90, that's the kind of legroom that you're working with on the crude front. Lastly, Mr. Gupta, I'm inclined to ask you, because Marico has successfully expanded through both innovation and acquisitions. Are you actively evaluating any inorganic opportunities, particularly when it comes to foods, premium personal care, or any digital-first brands, anything that's in the offing right now?
As an organization, we do make acquisitions, but they have to make strategic sense to our long-term growth. They have to be a valuation, which is something we don't have a FOMO as far as acquisition is concerned. As an organization, we do it in a very deliberative and a mindful way. So as and when opportunities occur, we'll look into it.